Okay, good morning, everyone. Look at the US stock markets. The Dow has earlier on recovered sharply from the recent low of 21,750 points. Since then, the Dow has climbed above the 23,000, 24,000, and also the 25,000 psychological level, forming the higher high and also the higher low formation. Recently, we are seeing another breakout of the 25,500 points level as the Dow formed the short-term breakout pullback and pattern was being established as the Dow looks to head towards its next resistance located towards the 26,000 or even towards the 26,300 points level. In the meantime, the 20,000 was as the immediate support level on the Dow Jones Index. All in all, the Dow is still forming the higher high and also the higher low formation, suggesting that the uptrend is still intact at current juncture. Similarly, on the S&P 500, we are seeing the S&P 500 has climbed sharply higher from the recent low of 2350. It climbed above the 2500, 2600, and also the 2700 psychological level. It formed the breakout pullback and deviation pattern towards the near the 2800. So for now, on the S&P 500, it looks to head towards its next resistance located at the 2800 or even towards the 2870 level on the S&P 500. In the meantime, the 2700 will serve as the immediate support level at current juncture. Gains on last Friday, whereby the Dow has climbed sharply higher, about 443 points, was mainly spurred by China's President Xi Jinping remarks that the trade talks continue at least for this week. So this gives some hope for investors or traders on the potential trade deal between the two countries. On the crude prices, has earlier recovered from the 42.50 levels. It's been hovering sideways between the 55.50 towards the 55 US dollars barrel mark over the past trading period. And on last Friday, we are seeing the crude prices has retested the 55 US dollars per level. For now, let's monitor for the breakout above that. Should there be a breakout above the 55 or 56, then we might see further upside on the crude prices to head higher towards its next resistance located towards the 60 or even towards the 63 US dollars per mark. In the meantime, the 50 will serve as the middle support level for now. If the 55 level continue to be rejected, then we might see the further consolidation on the crude prices until we can see a firm breakout above the 55 and the follow-through buy interest beyond that only we can confirm for the next wave of rally on the crude prices. The crude prices has surged close to 3% on last Friday, was mainly due to some outage on the Saudi Arabia. So this could help to alleviate the oversupply glut condition on the crude prices. Okay, some of this on a local front. The FMKLCI has been hovering on a raised manner between the 1665 towards the 1700 psychological level. We did see the FMKLCI attempts to breach above the 1700, but the lack of follow-through buy interest beyond that has sent the FMKLCI to trend just marginally lower. On the FMKLCI right now, we might be seeing just a sideways, continuous sideways trading on the local bros between the 1665 towards the 1700 until we can see a firm breakout above the 1700 and the follow-through just beyond that. Then you can confirm for the next wave of recovery on the key index back towards the 1740 level, or else the FMKLCI might continue to linger between the 1680 towards the 1700 psychological level on the FMKLCI over longer term period. So let's monitor for the breakout above the 1700, then only we can confirm for the next direction on the FMKLCI. On the lower liners wise, we are seeing the continuous recovery on the FBAM small cap index. After 9 days of rally on the lower liners towards near the EMA 120 level. We are seeing a bearish candle was being formed on the FM small cap index on last Friday, but this is not a reversal sign at current juncture. We think that this could be just some mild profit taking activities after 9 days straight days of gain, close to 1,000 points or 7%. The FM small cap index is braced for some mild profit taking activities. It could be something similar like this. After a long wave of a rally, we could be seeing some of the mild or sideways manner, or we wait for investors to digest their gains before the next recovery to resume. So we could be seeing something similar like this. We might be seeing some of the mild, just a sideways manner before the next wave of rally on the FM small cap index to trend back towards the 13,600 points level on the FM small cap. On stocks wise, we can firstly watch out for K1. K1 has earlier made a very sharp rally towards the 29 cents level. Since then, price has staged a pullback towards the 8, giving up all its previous session rally before the next wave of recovery to resume. Recently, we are seeing another wave of recovery the K1 as well. For now, we are seeing a short-term bullish candle on the K1, and this could be the potential breakout, pullback, and the continuation pattern being formed that we are going to monitor for this potential flag formation breakout, which is above the 25 cents level. Should price breach and also close above the 25 cents, then this could be the potential T+4 formation breakout or the flag formation breakout that we're expecting price to firstly head towards the 27 cents or even towards the 29 cents. Stop loss will be located below the 23.5 cents level on K1. On KPS, price has earlier made a very sharp rally towards the 2 ringgit and 6 cents level before staging a sharp pullback towards the 1 ringgit and 18 cents. The 1 ringgit and 18 cents is a very strong support level for now, as previously price has retested along this 1 ringgit and 18 cents on several occasions. Recently, we are seeing some of the recovery pattern was being formed, and this could be the potential bullish divergence signal. As we are seeing the price has been on the sideways manner, finding some support along the 1 ringgit 18 cents, but the MACD indicator has been forming the higher high and also the higher low formation. So for now on KPS, we are seeing already a short-term breakout above the 1 ringgit and 34 cents level on last Friday. So for now, we are expecting price to trend higher towards the 140 or even towards the 1 ringgit and 47 cents level. Stop loss will be located below the 1 ringgit and 30 cents level on our KPS. Things appears to be slightly positive right now. Should price breach above the 1 ringgit and 40 cents, the MACD indicator should be issuing a buy signal. RSI is also flirting mostly above the 50 level over the past 1.5 months trading period. On UEM Sunrise, price has earlier found some bottom along the 62 cents level. Since then, we did see price has staged a recovery just towards the 80 cents level. 80 cents level is a very strong resistance level, as you can see that earlier price recovered towards the 80 cents before staging a pullback. Once again, is recovered towards the 80 cents level and traded on a sideways manner since then. So for Sunrise right now, let's monitor for this short-term consolidation breakout along the 80 cents level. Should price breach and also close above the 80 cents, we could expect price to recover. Firstly, towards the 85.5 towards the 90 cents level. Stop loss located below the 75.5 cents on UM Sunrise. Should price breach above the 80 cents level, we could expect the MACD indicator to issue a buy signal. RSI could be rising back above the 50 level as well. LBS has recently staged a pullback towards the 60 cents level. Since then, price has been traded on a sideways, hovered on a sideways manner over the past close to a half-year trading period towards the 73 cents. For now, on LBS, we are seeing some accumulation was taking place on LBS as well. As you can see that some of the higher volumes have been traded throughout this period of time. For LBS right now, let's monitor for this short-term consolidation above these 70 cents, given that on last Friday we are seeing another another wave of accumulation was taking place on LBS right now. Let's monitor for the breakout above the 70 cents. Should price breach above the 70 cents, we could expect our price to firstly trend towards 73 cents. That will be the immediate target price for now, followed by the 74.5 cents level. Stop loss will be located below the 67 cents level on LBS. For LBS right now, this could be one of the lower risk zone that we can accumulate on this counter. As you can see that the MACD indicator has really turned out quite flattish at current juncture. MACD line has been forming the higher high and also the higher low formation. So there could be another wave of a recovery on the LBS, but we are not sure when it will materialize. Last two company for today, firstly will be QES. QES has again rallied towards the 38 cents level before staging a sharp pullback towards the 18.5 cents. After touching the 18.5 cents level, we are seeing price has been forming the recovery trend towards the 24 cents level. If it tested the 24 cents level twice or three times, but it did not break up above that. But on last Friday, we are seeing price has gap up and also break out above the 24 cents level, accompanied by some of the high ones being traded. With these 24 cents level broken, we could expect price to continue to trend higher towards the 26.5 cents or even towards the 30 cents level. Stop loss will be located below the 23 cents. And if you can take further risk, the final defense will be located towards the 21.5 cents level on QES. Things appears to be slightly positive on QES right now, as you can see that the MACD indicator has been forming the higher high, higher low formation throughout this period of time. SI has been maintaining its position mostly above the 50 level over the past 1.5 months trading period. Last company for today will be TDM. TDM has been on a pullback phase towards the recent low of around the cents level. Since then, we are seeing price has staged rebound, but the recovery was short-lived towards the EMA 120, which is around the 22 cents level, before price taking a pullback and trade down. On TDM right now, let's monitor for this short-term breakout above the 20 cents level. If price managed to break above the 20 cents and close above that, we are expecting price to trend towards the 22 cents. That will be the immediate target price for now, followed by the 24.5 cents level. Stop loss will be located below the 17.5 cents level on TDM. You can put in the chat box and reply you shortly. If there's no question for today, then we'll end the morning briefing. Thank you.